Hello guys, this video is actually meant for today's webinar, but unfortunately I will be a little busy tonight, mainly because I have some family related stuff, and also mainly because got a few other work related stuff. I'm trying to incorporate the new investment company, and then there are some stuff that I want to get it done before Chinese New Year, so I need to rush in a bit. Okay. So let's begin. Sorry, give me one second. Okay, I'm so sorry. Let's begin. So, this week have been a very eventful week. A lot of stuff happening. So, we do have a lot of our trades actually going in the right direction. Mainly, we profited on our Apple and Triple Q trades already. So, before I go through my portfolio, I just want to briefly cover the overall market condition also lah. Okay, so right now everything seems to be extremely bullish. Both S&P and Nasdaq are making new highs. Even Dow Jones is making new highs also lah. Okay, so everything is really bullish. So as I mentioned, there are reasons to be bullish. Mainly because firstly there is a explicit statement that there will be no more rate hike this year. The rates have already peaked, and then at the same time all the earnings are out. What I mean is all the important earnings are out, especially from all the big techs. And overall, aside from one or two, most of them seems to be doing okay lah. Amazon was doing great. Meta was doing great. Meta really pushed up the entire market a lot. It went up 20% yesterday, and it managed to push up the entire market lah. Even Apple initially gapped down 3%. Luckily, we managed to exit during the opening, but eventually recovered back to positive, if I'm not wrong. Microsoft was okay. AMD was all right. The only bad one that I can think at the top of my head was Tesla. Aside from Tesla, everything else seems to be doing okay lah. Tesla and Google, the rest seems to be doing fine lah. So important company like Amazon, which is actually a good litmus test for how the overall economy, how the consumer people how the consumers are spending, right, is actually still quite okay. So now, I also mentioned there are some tail risk that is that is quite prominent in the market right now, mainly on the real estate sector and the regional bank, right? So my plan for the next few weeks or next few months, right, I will still remain net bull as in I will have more bullish position than bearish position. And most of the bearish position, it will be confined into that tail risk, which is regional bank and the real estate sector. And based on the latest ISM report, it seems like primary metal and chemical manufacturing seems to be not doing well also. So I may be exploring those two sectors if we need some bearish position. But right now, I don't really have any stocks, any counter that I have shortlisted to go for the positions lah. Okay, so summary, remain bullish, mainly on consumer stock, consumer discretionary stock, tech, all this stuff lah. Okay, so as I mentioned previously, right, I also feel that the small cap space still have a lot of room to rally. It is not to say that the big cap will not go up anymore. I believe they will still go up, but I think the small cap companies will sort of outperform a lot better than the big cap companies lah. Okay, so now let's go on to the portfolio first. So now for my portfolio, right, I don't have much to update except for the Apple and QQQ that we recently TP lah. Okay, so I have Apple here, QQQ here. So now I'm going to explain my lot sizing a bit, because usually I will update this on Saturday lah. Okay, but unfortunately for Apple and QQQ, the trade was taken on Monday. And then before this Saturday, we immediately TP ready. So we actually hold the stock for only 4 days. Okay. So unfortunately, you were not able to see all the lot sizing before the it, you are not able to see the lot sizing when I enter lah. But nonetheless, right, I'm gonna explain the lot sizing strategy also, because if you are doing spread trading, this is what we call spread trading. So if you have no idea what is spread trading, right, do come for Friday webinar lah. Okay, Friday webinar is like not anyhow one. Actually, I do share a lot of important stuff that I may not be able to squeeze into the Saturday sessions lah. Okay, so if you truly want to be trader, you cannot just copy trade. So this is something that bears repeating. Okay, so now firstly, when you look at Apple and QQQ, right, you can actually calculate the risk for Apple and you can calculate the risk for triple Q. So if you have no idea how to calculate the risk, then I would say that your knowledge on options is not sufficient enough for you to be playing options. So I highly recommend you to go and read up or go and at least study a bit on how to calculate the risk. So anyway, my risk on Apple is about $8,000 plus. My risk on triple Q is also about $8,000 plus. So the reason why we want the risk for both to be equal is that, let's say if for this spread trade, right, one side is going to profit, the other side is going to lose money lah. Okay, so what we want is the side that profit, right, we want the profit to be somewhat proportional to the side that we are losing money lah. So we don't want a case where the side that profit actually lose more than the other side that is losing money. Okay, that's why the risk have to be at the similar level. The lot sizing have to be at a similar level in terms of risk. So now $8,000. If you look, my portfolio size is $200,000 USD. So if you consider $8,000, right, as risk, is about 4% of my total portfolio. So now 4% is not really a big number. I will consider above 5% to be more risk taking lah. Below 5% is still all right. But the thing is that in the past, right, I usually take about 2% risk, 2.5% risk. So 4% risk here is a little bit higher than what I usually take. But the thing is that the reason why I am able, or why I'm comfortable of taking that higher risk, right, it is mainly because these two trade, they are hedging one another. If one side lose 8,000, right, the other side is definitely going to profit, which is not only going to cover the loss, but it is also going to give us net profit. So because of this, right, I can actually take a much higher risk. In fact, if I want to, I can actually go for $10,000 risk or even $20,000 risk, because no matter where the market goes, right, I'm going to win money and either way lah. But the reason why I'm not doing something of that sort of level is that even though one is hedging against the other, right, there is still some risk involved lah. Okay, and the risk is that for some reason the market doesn't move, the market just went stagnant, then both will actually lose money. So that's one risk that you have to consider. Although the probability of that happening is not very high, right? But that risk is still there, and we cannot totally discount lah. Okay, so if in the future, if I'm going to make such a trade again, pair trading, right, I will probably be taking a much higher risk than what I'm doing right now, which is about 8,000. So in the future, I may be taking like maybe 10,000 or even $15,000, somewhere around that level. Okay, so hopefully you understand the lot sizing strategy for both Apple and triple Q. So let's say if I'm just playing Apple shorts alone without the triple Q hedging here, right, then definitely the Apple short, the risk will be somewhere around 4,000, 5,000 instead of $8,000. Okay, so this is how we actually trade. In fact, when we are doing long short portfolio, right, we are actually placing a lot of pair trades. It's just that you are not aware of it, but actually they are there. So that's the reason why I'm very comfortable with my position, because there is no way my position will lose money one. It will definitely be earning somewhere, because a lot of things is hedge against one another lah. Okay, so now I do have the rest of the stuff still open there. So let me just go to my open position. Okay, I've actually added my open position here, but sorry, wait first. So initially I was losing about 5%, but with the Apple trade, I have pushed up my portfolio back to a slightly better level. Now I'm losing about $1,000 plus now. Okay, so far so good lah. So far so good. I mean, in fact, I do have big hopes for quite a number of trades here, which I have strong conviction that they are going to go a lot higher. So hopefully we can capture those profit. So net total, I got $9,000 from Apple, which is 100% on risk lah. Okay, I risk $8,000, I get $9,000, so it's somewhere there lah. But for the triple Q, right? For the triple Q, I only lose about $400, which is very good, mainly because when the earnings came out, right, Apple was the only stock that was dropping, but Meta was up 20%, so it kind of buffered triple Q lah. Okay, it made triple Q actually go up higher, even though Apple is dropping. So it is like a best case scenario. Your short is going down, your long is going up. And another thing to consider also is that for triple Q, right, the ratio strategy is 1:1. I have 23 contract long, 23 contract short. But for Apple, right, it is a 2:1 ratio. 40 contract long, 20 contract shorts. Meaning to say, in this pair trade, right, I actually favored Apple going down a lot more than triple Q going up. So because of the 1:1 ratio on triple Q, the calendar spread, the risk was even reduced a lot more. So what we have here, right, not only the option structure goes in our favor, the movement of triple Q and Apple also goes in our favor. That's why we almost have no risk on this particular trade lah. Okay, so now let's go on to other positions. So Disney recovered and I'm up about $160. I think First Solar is a gone case lah. Okay, I don't think First Solar can recover to earn any profit. So I just take that loss already, even though I physically have not exit the position yet, but I put 0 there because this thing is I believe is going to go to 0 lah. Okay, so before I continue, another thing you want to focus on is also, you can see that my floating P&L, right, is actually negative 12,000, so it's quite big lah. Okay, and I don't want you to be distracted by this also, because this number is actually not that big. In reality, it is not that big for a few reasons, and the reason is that you can see on holding alone is taking up about $7,200 loss. But the thing about on holding is that we actually entered on holding like last year. You can see here, last year September 15 last year. So I've been holding this for about 3-4 months already lah. Okay, and the thing is, during this period, right, we actually have gotten quite a lot of cover call premium on this. And not only that, before we even got on holding, right, we were selling cash secure put. So this on holding is a assignment from the cash secure put that we sold lah. So we actually earned quite a lot of premium from the cash secure put last year also, and then plus all the covered call, right? Actually, even with this $7,200 loss, the actual risk on holding is somewhere around $1,000, $2,000 only. It's very small. It is just that all those premiums that we got from the cash secure put and the covered call, right, it is all sort of book ready in January. It is not being booked here lah, because all those options actually expired in 2023. It is just that right now we are still holding on to the stock position. So going forward, we can still definitely sell covered call, but I'm not going to sell covered call because I don't want to have a covered call and then the stock rallies and then my profit get capped, my profit get limited because I got a covered call there. So I'm just gonna leave on holding as it is lah. Okay, so my overall portfolio in reality is not down so much. It is just that some of the options premium were booked last year already. So AMR, also is the other one that is down quite big lah. Okay, so if we kind of remove on holding and AMR, right, the portfolio is actually doing very well. Okay, but for AMR, the thing with AMR is the let me bring up the stocks. Okay, so now it has been very bullish, but I do think that by March, right, when the earnings come out, this thing have a very big downside lah. Okay, and since our our long put expiration is in May, right, we do have significant amount of time to let this continue to fall lah. Okay, not only that, this is actually a calendar spread, so you can see the February, the short put is going to expire in February. Then once the short put expire in February, right, we can actually short the March one, we can short the April one, then eventually we can short the May one. So in fact, going forward, we might be able to sort of reduce the reduce the risk to almost like very negligible lah. Sorry, I think this number is wrong. This number should not be 4. I got typo error. Let me quickly amend it. Because you can't have the long and short both losing money lah. It's a bit not correct. Okay, let me check what's the last price. Actually, the last price is like almost zero already. Somewhere around there. I can consider this zero lah, mainly because in 2 weeks time, February 16, right? I don't think AMR can go back to 260. So most likely this is going to be profit lah. I mean, we will get the full premium here. Okay, and then Zion was doing quite okay also, but yesterday it kind of like rebounded back a bit, but nonetheless, right, it is still below the support level, and I do think that this one can fall further down. So I'm not really worried by this little small recovery day. I'll just continue to hold it. But the bad news for Zion is that the expiration is in February lah. Okay, expiration is in February, so we only have like another 2 weeks, another 10 more trading days for us to get profit from this, meaning to say in the next 10 trading days or next 2 weeks, right, Zion have to like move to at least like $35 or $34 for us to become profitable lah. Okay, but currently it's actually losing minimal amount, so I mean, I'll just let it be lah. Okay, so the other one that is doing quite okay is the Blackstone Mortgage Trust. So it is the commercial real estate risk lah. Okay, it's coming down already, so it broke through this support level. I just want to ensure that it can continue to break through this level also lah. Okay, so I'm not going to go through the fundamental of this already because we have gone through many times during our Friday sessions. So I'll just continue to hold on to this. Now, the beauty of Blackstone is that we only have a simple put option, meaning to say, right, if we fear the stock going back up, we can actually enter a short put, making this become a calendar or making this become a vertical, and then we'll be able to lock in some profit. We'll be able to reduce our risk significantly now. Okay, so we actually have a lot of options for Blackstone that we can play. So now, the other one is actually Symbiotic. Symbiotic actually recently rallied up quite a bit also, so it's doing very well. Okay, soon it's gonna hit TP level there already. Unfortunately for Symbiotic, my risk was very small. So and the reason why the risk was very small is that when I entered this trade, right, when I actually entered this trade, which was somewhere around the 22nd of January, a lot of my other trades were actually not doing that great lah. So I decided to reduce the risk a bit, but then now everything seems to be going well, but I'm not really earning enough lah. Okay, but nonetheless, right, Symbiotic is a calendar spread also. So if it continue to remain very bullish, right, we can actually add more position now. Okay, I can actually add more position to this if it like go up like crazy like that. So I do have quite a high conviction on this trade also, that it can actually go up a lot higher. So Symbiotic, we will wait and see, and we will adjust accordingly. And of course, sorry, I think I forgot about Disney. Okay, I'm not, I can't remember if I covered Disney or not. So Disney actually broke out of this resistance here, is hanging around there, and it seems to be consolidating a bit, but overall seems to be quite bullish now. Okay, so earnings will be coming out on 7th February, which is next week, Wednesday. So I'm expecting like a big gap up from this. So Disney also have a very good chance of getting big profit. Okay, so within this portfolio, right, I have Disney, I have Blackstone, I have Symbiotic that are actually in the direction already. They are already heading in the direction. It is just that how far they will go. And if you are able to get like 10K here, 10K here, 10K here, it's like 30K already based on my risk lah. Okay, based on my risk. So I'm actually looking quite forward to the February month. So the last two, on holding, as I mentioned, on holding is an assignment from a cash secure put. It is somewhere around negative 7,000 plus, but actually in reality, I'm only down about 2,000 like that, or even 1,000 plus on holding. Sorry, on holding, because we have booked a lot of profit on covered call and cash secure put last year already. So I'm also going to just let on holding be, because it seems like it is maintaining this level and earning coming out on 15 March. So hopefully that earning also able to push this whole thing up lah. Okay, and on holding is a stock position, so I can hold as long as I want lah. And of course, as I mentioned, I'm not looking to play any covered call, because I do feel that this can go higher, and I do not want my profit to be capped because I got a covered call there. And lastly, Allogene, this is a mechanical play, a mechanical trade on potential short squeeze, and it does seem to be doing very well right now. Yesterday it was up 9%, so I'm hoping this one, when the short squeeze happen, right, it can go up to 7%, 8%, sorry, $7, $8 like that, which is about 100% gain. Okay, so Allogene is also a stock position, so you can see in this stock position, right, I got this at $4.10. I got 1,500 shares with me. My risk on this is about $6,000. So if I lose 6,000, then I lose $6,000. Okay, meaning to say Allogene goes to zero. When Allogene goes to zero, I will lose $6,000. That's my stop loss. My stop loss is at zero lah. Okay, so that is for Allogene. So basically, I've covered all my position ready, and even though I'm down like this, right, I'm not panicking, because why? I have a plan. I know what's going on. I know what is moving, what is not moving, and not only that, most of my portfolio is hedged properly. So there's really nothing to worry about, unless you got your lot sizing wrong, you have too many bullish stock, all this kind of stuff lah. Okay, so you can also see that I have 6 bullish position, 3 bearish position. I will not really consider Allogene to be a bullish position, mainly because Allogene don't really care where the market is heading. It is just there by itself, and it is also more like a lottery ticket mechanical trade. So I basically have a 5-3 portfolio lah. Okay, 5 bullish position, 3 bearish position. So this 5-3 portfolio is something that I've mentioned many times already. So now, with with all this covered, let's take a look at some of the stuff that may be in play next week that I'm considering. So, okay, on the short end, right, we will continue to hold on to Zion and BXMT short. If Zion fail to recover, it continue to move down, but our option expired too early, right, we may actually consider rolling the option, or we may also consider adding more position to the options. Okay, so there's a lot of stuff we can do with Zion also, so not to worry too much about it. So on other stuff that we can short, as I mentioned, I'm going to look at the primary metal and the chemical sector to see what else is going on over there. So now, next week, if you were present for yesterday's session, right, we are actually looking at Lumen Technology for a YOLO play, a lottery play. The earnings is in 06 February, which is like next week. Okay, next week, Wednesday, just before sorry, next week Tuesday, just before the Disney earning. Okay, so we are gonna play Lumen Technology for a YOLO play to the upside. Okay, to the upside, see whether this thing can get squeezed or not. So do watch out for the trade setup. The other one is Groupon. Okay, Groupon. Groupon is it is a trade that not I have picked out, but one of my hedgy hedging manager, hedge fund peers, they came up with this idea and they were talking a lot. I wasn't paying attention. I was very sleepy, but I mean like okay, I don't want to consider this as copy trading also. Like they seems to be like they seems to know what they are talking about. And I mean they have very good performance now, okay? But I have personally looked through this myself. I mean I do my own due diligence also lah. I don't blindly copy. But when I do my own due diligence, right, a lot of things about this stock is not really like the kind of stuff that I will buy a bit of like it's not profitable and the revenue is down so much from 1 billion, 2 billion, 3 billion. Currently right now is like 600 million only. The revenue basically cut by like 20%. No, not cut by 20%, cut to 20% of what they have in 2016. And they are not making money. They are not really making money, but and the market cap is 400 million. So perhaps there's a buyout. They did mention about buyout, but we didn't really identify any company that are looking to buy out. But I would say that it is more of a mechanical play also because it has dropped so much that at some point, right, it has to go up lah. Okay, at some point you have to go back up a bit lah. But I do think that if this one do go up, I think the short squeeze and everything else will be quite aggressive rally. So the reason why I'm not really that keen on this is that we have Allogene trade for short squeeze ready, and I'm also looking at Lumen Technology for short squeeze and earning lottery play. Then I don't want to add another group on to it. So yeah, if you want, it's only $14. I'm also guessing the option will be very, very cheap. If you want, you can try for it, but personally, I'm not going to go for it lah. Okay, but then again, right? There are a lot of things that I didn't go for it. Then end up they rally like crazy also. But personally, it's just that I don't what this the long research on this doesn't fit in my criteria lah. So now the next one is General Motto. So somebody in my hedge fund group also mentioned General Motto and they think that it can actually go up a lot higher. I'm actually more keen on General Motto than Group On lah. Okay, if I were to like be forced to choose within these two, but personally, General Motto, overall, it is not that great, not that great. I mean, there are better stuff out there lah. Okay, there are actually better stuff out there. So those are some of the stuff that we are looking at, but I'm not really like aggressively looking out for new stuff also because I have 9 position right now and it's sufficient now. Okay, and in this 9 position, right, only one will be out. Only Zion will be out by February. Zion and First Solar lah, okay, will be out by this February. And I will still have 7 positions, so I'm not in a hurry to quickly like add a lot of stuff in. So I'm going a little bit slow lah, okay? But we will definitely have more trade ideas coming up, regardless whether we can enter or not lah, okay? I'll definitely share which sector doing good, which one can enter, which one cannot enter, blah blah blah. Even though I myself may not be taking the trade lah. Okay, guys, so that's all I have for you for this session. Once again, I'd like to apologize for not having a live session, but you can view this video on time lah. Okay, guys. Have a great day. Have a great weekend. Thank you very much.